Thank you for reminding me about this. Okay, you guys all have this document open?
Yep.
Can I start, or you still need a minute? Okay, so this question is about inventory, right? So a very important thing before we do anything, I want you to really know this, the inventory equation, right? So the inventory equation is like this. So you have a beginning inventory, okay? And then during the years, you will have made some purchases. You buy some more stuff, right? So whatever you have in the beginning, okay, that's kind of what left from last year, okay? And then this year you made more purchase together. This is goods available for sale, right? And then during the year, you are going to sell some goods, right? So the cost of the goods sold, so those are the cost of the items that are sold. For those items that are not sold, unsold, they stay in your ending inventory, right? So you add ending inventory. So this is really important, right? This is the key, right? You have to know this inventory equation. Does this make sense? Yes or no?
Yeah.
Sorry,
Yeah.
I can't hear you guys very well. Make sense?
Yeah.
Okay, good. So make sure you know this inventory equation, okay? So now we have different cost models, right? So how can we calculate cost of goods sold? Okay, so opening inventory, beginning inventory, the purchase, you know, right? Because that's how much you paid, right? And then how are you going to know the cost of goods sold, right? You also want to know the ending inventory at the end of the year, right? So we have different costing models, right? Different costing models. The two common ones is first in, first out. That's one. The other one is called moving average, right? Moving average costing. Okay, so these two methods, okay, will affect these two numbers. Okay, so the goods available for sale, this number will not be affected by costing models. Okay, because you know how much you have in the beginning and you know how many you purchased. So the total is the goods available for sale. So it doesn't matter which costing models you are using, you should have the same goods available for sale. This number will not be changed, right? This number will not depend on the costing model. However, when you use different cost models, it's gonna affect the allocation, okay, between cost of goods sold and the ending inventory. But the sum of the two numbers are always the same, regardless of the costing model. Okay, it's just the allocation between the two components. Okay. Okay, so this is the question. Okay, company name is called Higher Ground Coffee Corporation. That's the inventory transaction for the month. This is only for 1 month, ended December 2019. Okay, so let's take a look at the transaction. Beginning, they have 20-pound bags. Okay, they have 15 bags. each bag is 20 pounds. I guess all the bags are 20 pounds, okay? And the cost is $65 for each bag, right? For each bag, there are 15. And then they made a purchase. They purchased 25 bags at the price of 68, and another 25 bags at the price of 66. Okay. And now they made a sale. They made a sale, and they sold 40 bags. Okay. They sold 40 bags. And then they purchased another 20 bags at $66.5 per bag. And after this purchase, they made another sale of 25 bags. Okay. Well, this transactions is not surprising, right? You buy and you sell, right? That's how it works. When you buy, your inventory will increase, right? You have more stuff in your inventory. When you sell, you have less inventory, right? Because that inventory has been passed to the customers, right? So you can see that the price is changing, okay? You can see whatever left from last year, the price per bag is only 65. So now the first purchase, the price has increased to 68. And for the second purchase, it comes down a bit to 66. The third purchase is 66.5, right? So the price is fluctuating, right? The price is fluctuating. Okay, so what should we do? Okay, what should we do? So basically, how do we calculate the cost, right? So here, you can use either FIFO. FIFO is first in, first out. Okay, so FIFO is the abbreviation of first in and first out. So they are trying to approximate the physical flow of the inventory. So they are saying, I assume my products, okay, will first out if they first in. That means the customer will always buy, okay, the relatively older items, okay? The new items will be sold later. The old items will be sold first. So first in and the first out. That's the concept of FIFO. They try to approximate the inventory flow, okay? But in the real life, is that true? Do you remember your experience with going to superstore for the milk, right? Did you pick when you pick the milk, right? Did you pick the fresher milk or you pick the old milk, right? Well, you want to pick the most fresh milk, right? So what happened is, if you think about the milk, it's actually last in, first out, right? The new milk will be sold first, right? Because customers, they are trying to buy the most fresh milk, so then they can keep it longer, right? Okay. But anyways, this is FIFO is assumption, right? This is just assumption. We assume all the items first in, first out. Okay. Are we clear with this concept? First in, first out?
Yep.
Okay, good. Okay, now let's use this to calculate what's the cost of goods sold. Okay. Okay, so first, let's do this. So in the opening beginning balance, you have 15 bags, and each bag cost you $65. So what's the total cost for the beginning balance?
$9.75.
$9.75. Thank you. Okay. So how we do the calculation?
Quantity times price.
Yeah, quantity 15 times price. Okay. And then during the year you made some purchase, right? During the year you made some purchase. So your first purchase here, 25.68. So help me with the numbers, please.
1,700.
700?
1,700.
1700. Okay, so that's 25 times 68, right? It costs you 1700 to purchase that 25 bags, right? And the second purchase, what's the second purchase?
1650.
1650. That makes sense. $50 less, right? Say $2 each. Yeah, $50 less. Oops. Okay, and the third purchase. What's the third purchase here? So 20. This one should be easier. So 2. So it looks like 1, 3, 3. Is that right?
Yeah, that's what I got.
Okay, awesome. Okay, so that's the cost, right? So you have a beginning balance, 9 beginning balance here. Okay, let me do this calculation. So here, my beginning balance is 975, right? And my purchase, so I'm gonna add my purchase. I have 3 purchases, right? So I'm gonna add all my purchase. So total purchase would be 17 plus 1650 plus 1330. Okay, so what's the goods available for sale? The goods available for sale would be the sum of the 4 numbers, right? Can anyone help me with this? Yeah, 975 plus.
I got 5,655.
5, 6,
55.
5, 5. Okay.
Yes.
Okay. So that's the goods available for sale. Okay. Goods available for sale. Now, okay, now I'm going to use FIFO. Okay, I'm going to use FIFO. And I'm going to use the color just for your benefit. I'm going to pick a different color. I pick blue, okay? So I'm going to use FIFO, first in, first out, okay? So for the FIFO, okay, for the FIFO, I want to ask you a question, okay? I want to ask you a question. So think about in the ending inventory. In the ending inventory, those items are the new items or the old items?
The new items.
New items, right? So most recent items are on ending inventory, right? Okay, so now let's calculate what's the quantity left in my ending inventory, okay? So here, okay, you start with 15, okay? You start with 15, and then your first purchase, you buy 25 quantity. Your second purchase, you buy another 25, right? And then your first sale, you sold 40 and minus 40. And then your third purchase, you add another 20. And then your second sale, you sold 25. So I should have 20 bags left, right? So in my ending inventory, I should have 20 bags left. Does this make sense?
Yep.
Purchase will increase the quantity, sales will decrease the quantity, right? So it's a pure easy math, right? So I have 20 bags left, and you told me that These 20 bags are the most recent items, right? Which is the most recent items from which purchase? There are 3 purchases, right? Which purchase have the most recent items?
The 1330.
Yeah,
That one.
exactly, right? So the third purchase have the most recent items, right? And what's the price? The price is
66.50.
66.5. Yeah, exactly. So I have 20 bags. So how many you purchased for the third, in the third purchase? 20 bags, right? So that's, so you, under FIFO, you assume all the last purchase 20 bags stay in the inventory, in the ending inventory, okay? So now, what's the balance of the ending inventory? You use 20 times which price? Right? That's the price for the last purchase, right? So you get 13. So your ending inventory cost would be 1330. Okay, 1330. So here, your ending inventory would be 1330. Okay, can anyone tell me what's my cost of goods sold?
$4,325.
400?
4,325.
325. Okay, how did you calculate?
By taking the goods available for sale and subtracting it by the ending inventory.
Okay,
To give
very
you
good.
cost of goods sold.
Very good, right? So you can see this equation, right? I show you in the very beginning this equation. Okay, so goods available for sale is 56.55. Okay, that equals cost of goods sold plus ending inventory. So now I know my ending inventory is 1330. Okay, so now I use the deduction to figure out the cost of goods sold is 43.25. Does this make sense?
Yes.
Okay, good. Now I'm going to use a different color. Okay, sorry, I just needed to write this down here. So this would be 4325. Okay, so plus, and you get an equal here. So I'm going to use a different color. Okay, here I'm going to use let's see. Maybe, sorry, just give me a second. I need to find the better color. Red. Yeah, maybe green. I will use green. So I'm using a different. Oh, this is hard to see, right? Are you able to see it, or you want a different color? Okay, that should be better. Okay. Okay, so I mean using moving average mass costing model. What is moving average, right? So moving average, before you make average sale, you want to calculate, okay, what is the average cost of the inventory on hand, okay? Before you made a sale, okay, you calculate what are the average price of the inventory on hand, okay? So in this question, in the beginning, I have 975, my cost, and then I increased, I have 2 purchases before the first sale. So this is my first sale, right? At this point, before the sale, I want to know what is the average cost. Well, how do you calculate average cost? That equals total cost divided by, divided by total quantity.
I got an average cost of 66.33.
Okay, you have 66.33.
Yes.
Okay, that looks right. So how did you calculate it? You want to add up all the costs, right? So there are 3 numbers. So you add up 975 plus 1700 plus. So these are the total cost of the inventory on hand before the first sale, right? And what's the quantity? Quantity is 15 plus 25 plus 25. Does this make sense?
No, I
Oh.
calculated the actual cost instead of the total cost. My bad.
Okay, but does this make sense? The way how I do it?
Yes.
Okay, so this number is not right. So what is the number? So 65. So I got 66.54. Is that what you got?
I got that as well.
Okay, awesome. So that's the average price. Okay. So this is my first sale, right? My first sale here. So in the first sale, I sold 40 items, right? So for the first sale, I sold 40 bags. What do you think the cost number I should use? There are different cost numbers, 65, 68, 66. Which cost number should I use? I will use the average. I will use the average, right? Because this is a method called moving average, right? So I use the number I calculated, 66.54. Okay, so what is this number? So I have 2662. Is this correct?
I got that number as well.
Good. Thank you for your feedback. Appreciate it, Ruben. Okay, now remember, I also have a second cell, right? Here, I also have a second cell. So in the second cell, I sold 25 bags. So which the cost number I should use?
Would you have to find a new one?
Good job,
after
Ruben.
the-
Good job. Okay, you had to find a new one. Why? Because you have a third purchase between the two sales, right? Whenever you have a purchase, okay, so that may change the average cost, right? If you purchase it at a different price, so then your average cost will change, right? Because you have a new purchase. Okay, so well, here you have to be right before the second sale, you have to evaluate what is the average. So what is the average? Okay, So the average will be, okay, think about what we did, the total cost. Okay, and then remember my inventory level go down because I sold this much. So I had to deduct this value, right? Because that reduced my inventory. Okay, and then I also made a purchase of cost me $13.30. Right? That's my total cost immediately before the second sale. And then divided by 15 plus 25 plus 25 minus 40 plus 20. Does this make sense? The way how I write it down? Okay,
Yep.
let me check the chats. Yes. Okay. Good. Yeah. Awesome. So now I need to calculate this number. Okay, I need to calculate this number. So here is minus so my total cost right before the second sale is this, divided by the total quantity. So that'd be 40, I have 45. Okay, so this one divided by 45. So I have 66.51. So my moving average, my average is lower now. Okay, my average is lower because this third purchase is cheaper than the previous average. Does this number make sense? 66.51.
Yeah.
So now, when I made the second sale, I'm going to use the new average number. Okay, I'm going to use the new average number, which is 66.51. Okay, so 66.51 times 25. So I got 1662.3. Yes. Does this make sense? So the cost of sales, I have two sales, right? So when you say cost of goods sold, that including both, right? Including both sales. So my cost of goods sold, that will be equal to the first and plus the second. 2666 plus 663 equals 2 plus 1. So that equals 4325. Does this make sense?
Yep.
Okay, so that's interesting. So how come I have exactly the same number? That's right, because this number, moving average, is just by coincidence in this question is very close to this number, right? Because 6650, right? So that therefore this is not the best question. I will try to make something. These two numbers are not close, right? Okay. So moving average, my cost of goods sold here is 4325. So now my ending balance would be 55655 minus 4325. So that would be 1330. So in this particular questions, it's actually doesn't the FIFO and the moving average cost method doesn't make any difference in terms of cost of goods sold and ending inventory. However, you can see, right, the procedures in the calculation is completely different, completely different. Which one is easier?
Wouldn't it depend on the situation?
I mean, in terms of calculation, which one is easier?
FIFO.
Yeah, FIFO is easier, right? Because it's much easier for you to figure out what's the ending inventory cost, and then you can calculate backward on the cost of goods sold. For moving average, so you have to calculate the average price immediately before each sale, and you apply that average price to the sales quantity to figure out the cost of goods sold for that sales. And you may have multiple sales, right? So you add up all the sales number together, that's your cost of goods sold. And then you work backward to calculate ending inventory. So do we have any question on this one?
I have a question.
Yeah, go ahead, Joshua.
Would the cost of goods sold normally change depending on which method you use?
Yes. So you can see, like I mentioned, right, in this question, the goods available for sale during this month is the same, right? It's always 56, 55. So this number doesn't change, the goods available for sale in the month, right? However, when you allocate this amount into the two different accounts, cost of goods sold, that's an income statement item. And ending inventory is a balance sheet item, right? So when you try to allocate this number into these two accounts, that depending on your assumption, right? If you go with FIFO or average cost, that is going to affect these two numbers. However, the total of the two numbers would be always the same, unchanged, regardless of the costing models. Does that make sense?
So, yeah. So where would we, so in an actual balance, not a balance sheet, in an actual income statements, where would we look for in order to identify whether they're using FIFO or WaveCo?
Oh, so basically, very good question. So the financial statement has to disclose what's the accounting policy you are using. So in the note disclosure, they have to disclose to let the user know whether they are using FIFO or average, whichever method they are using. They have to disclose it in the note disclosure.
Okay, thank you.
Yeah, good question. Yeah. Anyone else have any question? So I have a question for you, okay? I have a question for you. Suppose, okay, suppose this number is not 20, okay? Suppose this number is, suppose it's 15. And this number is 30, okay? Suppose the second, we have 5 extra bags purchased in the second purchase, and 5 under. In the third purchase, there are only 15 bags purchased, okay? And you know in the ending inventory, you are 20 bags, right? So now under FIFO, what's your ending inventory? So you're gonna have 15, right? That's the most recent purchase. 15 times 6650, right? And then what about the other 5? Because there are 20, so 5. So the other 5 here. What's the price we are going to use for the other 5 bags?
66.
Very good, 66, right? Because the first most recent 15 bags is from the third purchase, and you paid 66.5 for each bag. But in the ending inventory, there are 20 bags, right? What about the other 5? Well, the other 5 must comes from the second purchase, right? So that's the 5, the second purchase, that's the 66. So just be aware, right? The way how you calculate ending inventory, right? Okay, anyone have any question? Any questions?
Seems to make sense.
Good. So if you have no question, I believe you are very comfortable with this, okay? So I'm going to, just for my convenience, I'm gonna stop recording.